Hey everyone, welcome back to Upside Down Data. Wanted to bring you an update about Zilliqa and what the upside downside potential indicator is making of its recent price action. So if you haven't had a chance to subscribe to the channel yet, please do that. Help us get to 1,000. That would be awesome. If you like the content, you could also give the video a like and we'd appreciate that. So let's get into it. This is the weekly chart for ZIL, and no big surprise if you've been paying attention to the market, ZIL has been in a brutal downtrend. And of course, that's true of many assets across the space, although some did make new all-time highs after the mid-2021 pullback. ZIL was not among those. It's been in a continued downtrend straight since May, and that has not changed. And it's quite a ways from changing. It would need to break about the 14 to 15 cent level before we'd be really talking about a macro level trend change. But still, it did just close its first green weekly candle in a couple of weeks, but after an enormous red candle the previous week, it's nice to see a pin bar candle there, which suggests that some buying pressure came in at around 3.7-ish cents, around up to 4, and now we're at 4.5 cents. So a little bit of support coming in there. The question now for ZIL and for many other assets is, what next? Is there more downside to come? Or is there any basis for thinking that we might be going to get some relief? Even if it doesn't come immediately, or even if it's not straight up, is there any relief coming? Are there any indications that we can see that would point in that direction? Now, I want to give you the UDPI, this risk indicator perspective on that, because that's information that you can't get just from looking at the chart and the RSI here. But I also want to make clear that I don't know what's going to happen in the short term. This is about probabilities. This is about assessing risk and making informed judgments based on history and an analysis of the data in as objective a way as we can possibly do. So that's what we're going to try to do. That doesn't mean that I know what's going to happen in the immediate future. There are macro factors, economic factors that have to do with COVID and that have to do with monetary policy and government decision-making that are not on this chart, right? We can't read them from the chart. We just have to wait like everyone else and see what happens with them. But we still can look at some of the indications from the price action itself and from the data and see what we can make of it. So with that said, let's pull up the UDPI for ZIL. Here are the long, medium, and short-term risk gauges for Zilliqa. The way to read this is that when you see a needle pointed to the left in the green zone, that means that there's plenty of upside potential that the model considers realistic for that time frame, and relatively limited downside potential that the model considers realistic for that time frame. When it points to the right, the opposite. So when it's in the red zone, that indicates that the model considers only limited upside potential to be realistic for that time frame, but plenty of downside potential to be realistic for that time frame. The long-term indicator is meant to be interpreted on quite a long time frame, so at least months, even up to years. The medium term you should think about in terms of weeks to months, the short term in terms of weeks, and even potentially days, especially when there's been violent price action like we've seen recently. The thing that I want to point out to you here that I think is important is that we have a kind of unusual situation here up on the charts, which is that the short-term UDPI is more extended to the downside than either the medium or the long-term are. And that's something that just doesn't happen that often. And when it does happen, it tends to happen at interesting times. And I want to show you what I mean by that. So let me pull up the medium and short-term UDPI for ZIL across most of its price history from early 2018. The short term is in red here, and the medium term is in yellow. And the reason that I wanted to overlay these on each other is because the relationship tells you more than either of them tells you by itself. You can think of these as, kind of like oscillators on the MACD, for example, the moving average convergence divergence indicator. This is another example, or like moving averages that you treat as signals when they cross over each other, the shorter or the longer. Now, this works a little bit differently from both of those, actually a lot differently, but that concept translates. We're looking here for where they are in relation to each other and when they're crossing and when they're crossing back. And what's significant is that when the short term gets more extreme to the downside, it gets lower risk, especially at low risk zones like -3, like we're seeing now, when that happens, that indicates not only that risk is low relative to most of the price history of the asset, ZIL, but also that risk is low and that volatility to the downside has been violent relative to ZIL's own recent price history. In other words, it means that there's been an acceleration. And accelerations tend to happen, especially at the end of moves. So we often see a blow off top or a capitulation bottom that leads into a change of character on the price chart. And when we see this kind of pattern on the chart, the short term getting quite a bit out ahead of the medium term, it means that there's been that acceleration and there's been a violent move to the downside. And indeed, that's clearly true if you look at the price chart of ZIL. But what's interesting, and the reason that I think this is important to note, is that it just doesn't happen that often. And when it happens, it tends to happen around bottoms, and it tends to precede pretty substantial moves to the upside. So we have really 5 examples here, 4 previous examples, and now we're making the 5th. Now, it's really important that you take into account the overall level of risk as well. So, the middle of 2018, we saw the short-term risk get down to about -2, while the medium-term risk was about -1. And that didn't mark any hugely significant event. There was some short-term volatility, but what was really more significant was what came later in the year, in late 2018, because in late 2018, there was a pullback in the market from about 3 cents down to about, I forget exactly, 1 and change. It was a pretty substantial drop, more than 50%. But subsequently, over the following several weeks, there was an 80% pump. And if you managed to hold it until the top of the move a few weeks later and sell at the top, it was more like a 140% pump. And so this first time that we saw short-term risk get out ahead, get lower than medium-term risk, and bottom at around -3, with medium-term risk bottoming a little bit later at that same level, that was followed very closely by a nice 80 to 140% move. So that was example 1. Example 2 is the COVID capitulation in March 2020. That one kind of goes without saying. Most assets rebounded after that, or any asset that did rebound tended to do it pretty impressively. ZIL was one of those, and it made a huge move after coming out of that March 2020 capitulation. But it happened again 2 more times. Once in late 2020, if you go look at the price chart of ZIL in September and October of 2020, before that move, it was setting up for a big move. That's when it made its run up from about its current levels at around 4-ish cents to 25 cents. So once again, that's another situation where the short-term risk getting out ahead of the medium-term risk marked a bottom that led into a major move to the upside. There was one more time, and that was in May and June of 2021, which was when we got, the next huge dump. And that too, it didn't change ZIL's trend. It did not get high enough to make an all-time high. So it's continued its downtrend, but it still did put in a nice about 150, 160% move there, bouncing back up from its low to about 14 cents. So in every situation in the past of this asset, when we saw the current situation playing out, it led to a nice move to the upside.